Hey guys, welcome back to the channel. Today we're going to be going through a few of my trades in my trading journal. I had a few people request that I kind of go through and review some of them. So let's jump straight into it. So before we get into the first trade, I just actually want to mention I do use TradeZella to journal all my trades. Something that's been really helpful recently that I've kind of worked out that I can do is I draw up all my levels, everything like that for my trading session, and I can save it as a layout. So then every trade that I've done in that session, I just automatically load that layout and it's already there for me. That's what you can kind of see here. So this trade was actually done quite a while ago. But all of my lines, everything like that is still there when I go back to look at it because I've saved it as, I guess, a layout on the screen, which is really cool. So just pro tip if you use it. If you want to try it, TradeZella as well, use the link below. It's basically novice10. Use that code, you get 10% off your first sign up, which is pretty cool. I kind of want to give you a bit of a layout on, I guess, this strategy, just so you can understand what my thought process behind this was. So I use basically 2-minute, 5-minute, and 30-minute levels, as well as just an overall sort of bias, right? So right now I can see that we were in a bit of a channel going upwards at this point in time when I started my session. So I kind of had that in the back of my mind. Now this trade, we were on the higher end of that channel, which means that for me anyway, it meant that if I was taking a short, it could still play out and have more probability because I am at the higher level of that channel. If I was at the lower end of that channel, I would be very wary of actually taking the trade. I would need a lot more kind of confluences to make me go against that. But with my sort of trading, it's a mixture of a few different things that I've learned, but one place that I got a lot of my, I guess, techniques from is Al Brooks, his price action trading course. It was so handy. If you want to check it out, I've also got the link down below. The reason why I did his course, it was like one of the only courses that weren't that expensive, right? So it's $399 USD, which is crazy. If you look at any of the others or any of the gurus on YouTube, they're selling their courses for like thousands of dollars, and that's USD. So when I pay for that, it's like almost half on top of that again. So really, really expensive courses. But I did this one and I got so much value on it. I will keep in mind he is a bit of a boring talker, very monotone, but I promise you will actually get a lot of value out of the course. So if you do want to check that out, jump down below in the description. It'll be there for you to check out. But essentially with this setup, it's something that he talks about, the high to trade, right? So when price pulls back, normally you'll get a higher high, and then obviously it'll continue. I've kind of mixed this with volume, which he doesn't speak about as much in his trading course, but I do mix it with volume analysis to help me work out when to enter. Before I begin, I had, obviously, again, as I said, we're in a bullish channel, so we were on the higher end of that. So I was thinking that we were or possibly could be moving down, and we were at that 30-minute level, which made me also even more so bearish, I guess, on this particular trade. So I want to point out that what I have here when I've got it loaded up is what my execution should have been. And this is how I executed. So I'll read out what I said here. I said, great trade idea, but I had terrible execution. Patience is also something I need to work on. I need to wait for price to look how it should and have the stop in the correct place as well. To do this, I need to calculate my risk and not get slack. So sometimes, because a lot of my risk will be very similar. So let's say I'm normally about 5 contracts or 3 contracts or whatever it may be for that trading session, depending on how volatile we are. I just will stop calculating and I'll just kind of enter, which is kind of where I messed up on this trade. I should have calculated it because then I would have kept my stop in the correct spot rather than being too tight. Basically, I've said also I need to look at volume a lot more. This would have helped me get in at the right time. My entry basically was here. Volume had been dying off in the pullback, as you can see here, which is again what caused me to enter here. But I didn't quite have that high 1, high 2 sort of, I guess, pattern that I like to see, right? It wasn't very clear. So I could have been a little bit more patient with seeing that occur, right? Because if you can see here, volume still continued to drop, but it actually formed that high 1, high 2, an entry, let's say somewhere around here as price dropped on this one, or even this one here, would have been okay, right? Obviously, best case scenario on the low of this one, but it's likely I might have even entered on this one. But having this stop above this 30-minute level should have been where my stop was, right? So not only did I enter early, so the setup wasn't very clear yet, I also put my stop very tight because I didn't calculate my risk properly. So even if I entered here, if I calculated my risk properly and stayed above this level here, I would have normally gone to the round number. So 202.55. So I would have been somewhere around here. I should have been okay, right? I shouldn't have been tapped out of the trade. Basically, if I had entered correctly, I would have easily been able to get a 3-hour trade. I probably would have exited a little bit earlier. I probably would have just taken it at the 5-minute level here because it was a nice strong level. We had a touch point here here as well. We rejected and then broke through, but when we broke through quite strong with a gap, as you can see here. That's how this trade went. I think it would have been a really, really great trade. Just a few things that I need to tighten up to actually get it to where it needs to be. That's that trade. So let's go to the next trade here that I have. You can actually see this was the same trading session. So I probably won't go through, I guess, my idea of obviously the ascending channel. Ascending channels, we're near the top of it, so expected to come back down. Ascending channels also are likely to break, as you can kind of see later on in the session. But what I want to focus on obviously is this trade up here. So again, we're at the 30-minute level. We had an extended push up. We were at the top of the channel. Price started to weaken, as you can see here. So we started to weaken. Coming up to that level, we were dropping in volume. I like to call this setup a final flag because, again, that's something that I've learned off of Al Brooks. Again, if you want to check it out, link is down below. But essentially, that's the trade idea that I had here, right? My notes down here, which I'll read out to you. Dropping volume, coming up to an important price level. I did enter a bit early. I should have waited for confirmation. That's something I need to work on. So again, my patience in my trades, like I've got the idea, but I really need to make sure that the idea shows. So I need to be using my footprint chart more. Sometimes when I'm like trying to improve something, I focus on that one thing way more, and then I miss out, of course, on my my other things that I've already learned simply because I'm trying to focus on that. And I realize I want anybody out there that's struggling with this just to know that sometimes when you're learning, just like anything, sometimes you can only focus on that one thing and improve that one skill and then like build up on that. And sometimes you've got to take 2 steps forward, 1 step back, 2 steps forward, 1 step back. That's how it's going to be sometimes, because when you're learning something new, you have to put all your focus into it and build on that, right? And that's what happens to me sometimes. I forget to look at the footprint chart, or I get too absorbed with something else that I'm trying to improve that I'm just forgetting to look at other things. So this first ad wasn't too bad. It could have waited out, but like we had increasing selling volume. It wasn't by much, but we were increasing. But this ad was great. We broke this low. I re-added and we continued down. However, the last 2 ads were incorrect because the 5-minute level were at a level which I didn't mark up. So something that I'm noticing is as the session plays out, I'm not marking up new levels, which is becoming a bit of an issue for me, because if I were to mark up fresh levels as the session is playing out, I'll exit at the right time or anything like that. So something that I'm also trying to improve on right now. But if you have a look here, I had a 5-minute level just here, and I was adding there, which was something that I shouldn't have done. Something that I also noted here was that my 2R seems to be kind of like where my trades are going at the moment. Now, please help me out, guys. As I said, I'm not a profitable trader yet. Do you guys prefer to set fixed profit targets? Does that work better for you guys? Because it's hard for me, right? Because the way I look at it is like I could get more out of a trade if I'm a bit more intuitive or a bit more wider scope than that. But price doesn't move like that always, right? Sometimes that works really well for me, where it's like, oh, I'm going to hold this because I believe it's actually going to be going higher, et cetera, et cetera, et cetera. But sometimes doing that makes me actually lose more out of the trade, right? Because I was expecting, for example, this trade to, come down, which it did end up coming down, but I'm more a shorter term trader. So should I have just taken, should I just have fixed targets? I really want to know what you guys think with this, because I think that'll help me understand and probably even be more profitable is just by having fixed set targets rather than, holding it and seeing how much I can really get out of the trade. I think I know the answer to it, but I would like to know what you guys think. So leave a comment down below. I got out probably a bit too late as well. So I got out all the way up here, right? There's a few reasons, because we weren't moving up on high volume, but regardless of that, the price action was huge, right? And I think, and we're at a level, if I knew we were at a level, I probably would have exited just above this level here. So I wouldn't have added these contracts, which meant that my profit when I got out probably around this point would have been a little bit more than the $86 that we see over here. I would have been much, much better off. All right. So again, this next trade is actually the same trading session. Profit was 180. Not too bad considering where I added, but I probably exited either a little bit too early, I think, on this one, but I also entered early as well, which I want to go through. So with this trade, it was a high one, high two trade. So you can actually see this level here. If I go to the 5 minute, we can see that it was actually a 5 minute level as well. As a 2 minute level, but I marked it as a 2 minute level at that point in time. Again, dropping volume as we have that pullback. Okay, after really good bullish signals, right? I was slightly worried with this trade because it did have this huge rejection candle, but we were on a larger sort of big picture scenario. We were still in an ascending channel. We had just come off the bottom of it, had massive strength right here, and we're still kind of in that middle zone. So to me, again, a learning point, I guess, from Al Brooks, he states that the markets have inertia. So they're more likely, if there's nothing in particular that's stopping them to go the other way, they're more than likely to continue doing what they're doing, which in this case was going up. So that's why I did end up taking this trade. But essentially, as we had that pullback, we had the dropping of the volume. I entered early as buyers started coming in. They were on higher volume as well. But again, I probably should have been waited for the actual setup to look like my setup, which is like that pullback of the two smaller red legs, and then the continuation. So I could have been more patient. It still worked out for me in this case. So I noticed that obviously we had this low here. We had a bit of a gap, so I put my stop just below here. So I entered again as it started looking more like my trade as well. So I got more confident because it was playing out. So I added here. I then added again once we got that really strong push. Added as I saw momentum start kicking in again. We did hit this level here, and it did pull back a little bit, so I was a little bit wary. But at this point, I had 2 touch points to put a trend line. So that's when I started moving my stop up kind of to follow the trend line, which I was doing here. As obviously price went up, as you can see here, we hit this 5 minute level, right? We were in a bullish channel, so I really wanted to get more out of this trade. So I held as we rejected that level. If I took, I would have got perfect 2-hour trade. Again, this is where I'm coming in to see that most of my trades are going 2-hour. Should I not be, trying to get that larger trade to hold? Because it still would have worked, right? Like my idea worked. Should I get better at holding, right? Or do I just need to take that 2-hour trade? Which I'm still trying to work out. So if you guys, have an idea or have an opinion on this, please let me know. I'd really like to hear what you guys think. But I was using this trend line basically to keep me in the trade. Now, as it rejected off this level, I got fearful. I started playing around with this level. So I was like putting it tighter and I was like, nope, I'm going to put it here, and I got tapped right out. Now, what I say down below here, I basically say that I entered early, which again is a very obvious thing that I keep doing. I need to make sure that there's aggressive buyers actually stepping in on the footprint chart. Consider that we were in a channel. I could have held this trade higher, but didn't want to see my profit go, and price broke the trend line. I could have held until we approached the top again on dropping volume. Managing my trade on a 5 minute candle might have been easier. So I want to explain what I meant by this when I put this down there. So as we came up here, we're still on like pretty decently high volume. On the pullback, we dropped volume, which is what I want to see if we want to see it continue going strong. There's not much, I guess, interest in the price going down at this point, because as we moved down, volume was dropping. So there wasn't as much interest on the down move, right? Now, as we came back up though, volume was still dropping as we were coming back up to this high. That in itself could have been my signal to either get out below at this candle or just get out at this level period, right? Of course, I was already out of the trade then, and didn't really get a chance to see this through. But either way, that would have still ended up in the 2-hour trade, regardless of whether I got out here and just put it as a fixed profit target, or I made that decision at that point in time if I was still on the trade. So something to, I guess, consider is that, one, I'm focusing too much on the money factor because I didn't want to see the profits go away rather than just trading on what I'm seeing. But of course, that's easier said than done. But that was that trade. I still made a little bit because I was adding, of course, and I love how I added on the lower end. Sometimes I'm adding too late in the game, but I really added. And then after that point, I kind of let it go because I knew that there was this level here. And I was being kind of conscious of that. Price wasn't extremely strong. We were still having quite a few pullbacks within price. So I wasn't adding at this point, which I actually really liked that I did. All right, so this trade's actually on a different session, right? So again, but it was very similar. I'm noticing if I have like a nice channel or something like that, my trades end up, I guess I have a better idea or a better bias when it comes to trading. If we're in like a flat channel, it's a lot harder. But if I have like some sort of clear channel within, let's say, the 5-minute time frame, which I'll show you what it looked like on a 5-minute and the 30-minute, just to kind of get a bit of an idea on how we looked. There was a nice like clean sort of channel here going. Something I want to point out as well, which I've struggled with learning when a trading session just is not a session I should be trading. That's something that is actually a big issue, and I lost a lot of money just recently on a trading session. I think it was Thursday night, because it was basically price action was just very wicky on all time frames, especially the 30-minute, which should have been a clear sign for me just not trade that day, but I still did. So something that I'm working on there. But back to this trade, as you can see, we had a nice channel, so it gives me a nice clean bias on how to trade that day. First of all, what I mentioned, so obviously we're in the ascending. I've got my levels marked out. You've got a 2-minute level here. I want to actually have a look because it's likely that we could have put a 5-minute level. Yeah, so a 5-minute level could have been marked here as well. I like to stick with the obvious levels, right? Because if they're obvious levels, other people are going to be seeing that as an obvious level as well, which means hopefully more people will be trading on that level, therefore more volume, and price will actually react to that level. But essentially, I had a 2-minute level marked here where you can see we had touched multiple times over here. Yes, we broke through, but when we broke through, we again came down, pushed up. As it came to this level, we pushed up. So it was still reacting this whole way through to this level, regardless of it breaking it and then coming back down over it. We were still reacting to this level in some sort of way. So as we're coming down, this channel had been going on for a very long time, which influenced my trade here. Because at the end of the day, normally if I have a high to set up, right, coming up, I probably wouldn't have taken it here because this channel line is acting as a resistance level. So I probably, in normal times, I wouldn't have actually taken this trade. But the only reason why I considered it was simply because we had been in this channel for a very long time. And if anyone knows, ascending channels are likely to break to the downside. So yeah, basically that was kind of my big idea around this trade. I had the high to set up that had come up here. So we pushed up, didn't succeed, pushed down again, tried to push up, but we weren't really holding above this 2-minute level, as you can see here. And that's when I saw price reject off this. That's when I entered, because we were also, as we were pulling back, we were on low volume, right? We had low volume, nice, strong volume, strong push down. But then as we were trying to, I guess, have a pullback, we were losing volume, which is what I want to see, right? So I entered there. Now, entered. I had my stop above this kind of mess here, as I figured that was kind of like the top of the pullback. So I had my stop here. So I might just pop that in for you guys just so I can show you, I guess, the trade in terms of multiple, all of that sort of stuff. So I had my stop above here. I got out here. Something I want to tell you guys on this session, I wasn't feeling very good. Had a few things happen at work this day. So I wasn't sitting in front of the chart as this trade played out. And that's why you don't see me adding. Otherwise, I probably would have added in this trade. And I'll kind of go through where I probably would have added some contracts on to maximize this trade. But I'll continue anyway. So I'll kind of go through what I mentioned down below. So what I was aiming for was I was aiming for this 5-minute level, but I had a feeling it was going to break. And the reason being is because if we have a channel, a lot of the time price will want to go all the way to the start of the channel. Again, something I learned off Al Brooks. But again, what you learn there is a lot of the time price will want to then go back to the starter level because it wants to get all the liquidity under these lows here. So I was aiming actually at this level, even though I knew that there was a 5-minute level here. So this is where obviously where I got my fill anyways, on my trade. So I want to read what I've got down here. I said price leaks and kept closing below the level with no directional bias. So what I mean by that is the price action itself, there was a lot of wicks on both the top and the bottom. Price didn't really indicate that it was really bullish or really weak. It was kind of just messing about in this area. Now, again, something I learned from Al Brooks on his trading course is that if there's no direction, a lot of the time the market has inertia and will continue doing what it was previously doing. He also talks about an idea where price moves in 2 increments. So normally if you get a bearish leg, you'll get another one and then a reversal or a deeper pullback, right? Which is exactly what happened here. So basically what I said was we had one bear leg, price had been in an ascending channel, which could fail to the downside. And then I just mentioned that I was unsure why my fill was so bad. I had a limit order. I wasn't watching the market. But basically that's why I still took this trade, even though this resistance level was here, was because we've had a nice, strong bearish leg. We've been in the channel for quite a while now. So I was kind of expecting it to break. Now, some people may kind of go to me and go, well, you're trading what you think's going to happen, not what's happening right there. And I do agree with that. But I guess that's where it comes into what I've seen happen multiple times over and over and over again. And I was seeing some really strong bearish action here. And we had no real clear sign that this was really rejecting this level. Like there was still a lot of wicks up the top, a lot of bearish bars. The bearish bars had bigger bodies. Again, you'll learn a lot about this sort of price action reading with Al Brooks' course. But so I entered here, had my stop above here, and let it run. My take profit hit here, even though it was actually set down here. The reason why I think I got filled so badly was because this probably moved very quickly and moved up very quickly, and I got filled terribly up here rather than actually where I should have been, which was all the way down there. But I'm assuming a lot of people were taking profit here, as you can see with the huge spike. If I was watching it, I probably would have exited, here anyways, as the volume was extremely heavy. But so where I would have added in this trade, right, which is I want to talk about this because I think I would have maximized a whole heap more if I was really adding to this trade where I should have. So as it broke this level, I would have added. So as it broke this level here, I would have added. Okay. As the pullback hit and really rejected this level as well, and I saw more volume come in, I probably would have added again. So that's how I feel about that one. You have a gap here, which also, again, shows strength in the price action, that we have gaps to the downside. I probably would have added after that as well. And I would have trailed my stop. Soon as we kind of see like a bit of, I'll kind of draw it up so you know what I'm talking about. I can kind of see like this line, I guess you could call it here. I start to see a bit of a resistance area here. So I would have started trailing my stop down as we were coming down as well, if I was to be managing this trade how I would normally manage it, right? But But yeah, that's that trade. I really, really like this trade. I'm kind of disappointed that I wasn't watching my screen at this point in time. But it just shows that you can trade like that as well if it's the way that you like to trade, right? All right, so this was actually the same day as the previous trade. But this one's actually a losing one. So I didn't quite read it right. Which is actually why I ended up sorry, the previous trade that we did ended up walking away from my screen. I took the trade, but I was like, I'm just going to let it do its thing. Like I'm done for the day. But what this trade was, obviously, again, big picture's the same because it's the same trading session. I went long here, right? I saw the high one, high two. We had kind of dropping volume. It wasn't very clear, as you can see, like we were still having spikes of selling volume, right? But we didn't have like a nice clear drop of volume in both ways, right? We didn't get a bit of like a balance or no interest, which is something that I want to point out. And I'm getting better at kind of reading whether the drop of volume's clear like this. It's a nice sort of what do you call it, like a staircase, whereas here it's actually jumping up and then back down, jumping up and back down, which could have been a signal to me that this trade wouldn't have worked. But another signal is the fact that we were right at the top of this channel, right? And channels with ascending channels, you have a higher probability of it breaking to the downside than you do to the upside, right? So that's where I went wrong here, right? I just wasn't considering the full picture. I did have a 5-minute level here, so that's why I did take it, because I had started noticing that 5-minute levels were decent to trade off. But what I mentioned here was we did have a 5-minute level, but I should have considered that we were still in a channel, resistance above, not taken, and should have not taken this setup. I also want to point out price action on this trade. Wicks on the top on most candles, which would also indicate this trade as a pass up. So there were so many wicks on the top, right? Compared to the bottom, the wicks were pretty predominant. Like we had a nice rejection here. Like we had a lot of wicks at the top, and both sides were quite strong. If anything, the bodies of the bearish candles on this were actually a lot larger than the green candles. So something that I want to point out, right? Because that would have indicated to me that this setup would have failed, right? This should have just been simply a trade that I just passed up, but I didn't. So that was like, this loss was a mistake. This was incorrect read. I wasn't paying attention. And if anything, this should have been a final flag setup. Like we had a nice 2-legged move up from the bottom of the range. 1, 2, we're at the top of the range. Normally what you'll see is a failed flag where you'll get a balance, and then the balance will fail after the nice 2 legs, and we'll have an extended pullback of some sort. So this was a missed opportunity for me as well. I think there's a lot to learn from, and I hope the way I'm, I guess, describing the price action helps anybody out there, because knowing this and focusing on this helped me. Again, it takes me time to kind of take all these things into consideration at the exact same time. It's really helped me kind of understand a lot of things when it comes to why some of my setups have failed. All right, so I hope you guys can see this screen pretty good enough and see what you need to see, but we're on a 2-minute level. Okay, this is again my high 1, high 2 setup. So basically we get a push up. I'm expecting a pullback worth 2 smaller legs for then a continuation to the upside, right? So I'm playing the pullback and letting it continue. Bigger picture is the same as the previous trades because it's the same trading session. And essentially, if we have a look at volume, on the pullback, volume was dropping. Now, this one wasn't as clear, right? And the reason being is there wasn't that many candles within that. But if I were to drop to the 1 minute, the volume drop was much clearer. I just want to point that out, that the volume drop was a lot clearer within this trade. Okay, now with this one, a safer bet would have been, purely because we did have a fair few wicks on the top of these candles, a safer bet would have been waiting for price to actually, I guess, show aggressive buying, which we did. As you can actually see, that's exactly what happened here. And I would have been watching my footprint chart, which unfortunately TradeZella doesn't show, but that where buyers started to actually aggressively come in here, which is why I entered on this candle, although I actually read the 2-minute chart. So you can't really see it here, but you would have been able to see it on a footprint chart, right? Where the buyers actually started stepping in. And that's why my entry was actually perfect, even on the 1 minute chart, even though I wasn't watching it. So I basically wrote down here, which I'll just kind of read out. Such a good trade, entered correctly, added in great spots, was patient and held through the shakeout and exited at resistance. So I played this trade really well, right? In multiple ways. So obviously entry, we know that's great. My stop was below here, right? It was a nice 2-hour trade, and we also added in between. So realistically, we actually got a little bit more than the 2-hour. I do mention the shakeout because right now at the moment, some trades I'm just either getting tapped out a little bit too early when I really should have been more patient and let price develop and understand that there's going to be pullbacks. And sometimes I'm not as, I guess, forgiving to price, and I get too scared to lose that profit. I think that's more of a mentality thing, and I need to be, I guess, more aware that price will drop a little bit and have pullbacks and things like that. And I've got to have more conviction within my trades. But the thing here is we obviously take off. We get some good push after I enter. So I enter a few more contracts. Okay. Price comes up. This is obviously another level here. So I'm being careful of this high. But essentially, price drops. We get a push up. It breaks the high. I do add here. The reason why I say I didn't let it shake me out was because it pulled back here, right? And I didn't jump out, which in normal cases I would because we're rejecting that level. But I didn't because we were on lower volume. So I let it play out. And it's actually, again, in a bigger sense, my high 1, high 2 setup. And that's why I added up here, was because my setup actually appeared again in the same trade. So I added up here, as you can see in this entry here. Okay. And then we got this peak of volume coming up to this candle here at the resistance, and we had price action showing a huge wick, which is again obviously a bearish sign. So I jumped out of that. Now you could have said that I could have been aiming right at the top here, and I would have probably got almost 3R out of that trade if I exited right at that point. Which is something I'm battling with at the moment on, where to exit, how to get more out of the trade, et cetera, et cetera. But I think we're also at a 5-minute level here. This was a really, really good exit for me. I got 2R out of the trade. I added, so it would have been actually a little bit more than 2R because I was adding on the way through, and I trailed my stop, but not too tight, allowed the shakeout to happen. And it didn't shake me out, which was really, really good. So that's the last trade that I'm actually going to be going through. Hopefully this video isn't too long for you guys, and hopefully you find some value out of, I guess, what I'm saying here. Hopefully I make some sort of sense. I would really like to know your opinions about my trading. What's your thoughts? Let me know if it's helped you out. Again, if you really want to try out Al Brooks' trading course, which I would recommend it. It's helped me so much. It's linked down below. And also, again, I use TradeZella. So if you do want to try out TradeZella yourself to journal your trades, link down below. You also can use the code novice10 to get 10% off for your first year, which is really cool. So hopefully this helped you guys, and I'll see you in the next video.